for all persons. GFT, a worldwide leader in currency trading.
Live from the floor of the New York Stock Exchange, you're in business with Margaret Brennan.
Welcome to In Business. I'm Margaret Brennan. We are following all of this breaking news. A major sell-off right at the open here on the floor of the New York Stock Exchange. You're looking at a 3% drop in the S&P 500. We have breaking news on the housing front. Will this back up that fear of a recession, or will it help us staunch these losses? Take a look at existing home sales for the month of July. The expectation is that we are going to see a build of about 5 million. A disappointment there, and a big disappointment month over month, a decline of negative 3.5%, and an expectation that we are going to see a bounce of 3% for the month of July. Big disappointment in an already weak housing market. It's not the only economic data point we've got today. Also looking for July leading indicators. Forward looking here, better than expected. A little bit of a bright spot for the month of August, though. Philly Fed just coming in, showing big contraction in that manufacturing, down 30.7. An expectation we'd see a bounce in that August figure. And as you can see, we were already down in the New York Stock Exchange floor. I'm now seeing the S&P 500 drop almost 4%, just 30 minutes in the trading day. 3.5% decline in the Dow Jones Industrial Average. That adds up to a 408-point decline. And the NASDAQ experiencing some real selling. These numbers aren't helping us right now. Let's get some instant analysis of what we just learned about the housing market, about the economy, and get some traders' perspective here on the floor. Want to introduce you Ben Willis of Sunrise Securities. Also want to bring in Marcus Schomer, Chief Economist for PineBridge Investments. Marcus, bit of a mouthful for you this morning. Wow, big disappointment on Philly Fed. Existing home sales also surprised. What's your read?
Well, I had a slightly less optimistic expectation for existing home sales, but we shouldn't forget these are sales decisions made in May and June, and doesn't even reflect the very different economic environment we find ourselves in right now. So this is almost doubly disappointing, because housing sales were weak coming into this weak phase that we're in right now in the U.S. The Philly Fed Index is more of a reflection where we are, and I think my concerns are that we are increasingly moving into a confidence crisis, which may even slip into a confidence recession next year.
Well, confidence crisis certainly seems to be what's happening here, Ben, on the floor this morning. Now we're down 4.25% on the S&P. I read these numbers and you said, ouch.
Yeah. I haven't seen any good news this morning, other than if it's a little vengeful, the idea that the Department of Justice is investigating S&P. But other than that, the news that came out of China on their housing sales this morning coming out, Morgan Stanley lowering expectations for the U.S. and the Euro economy, and then the Philly Fed survey. I mean, no wonder Mr. Closer has been a little bit more hawkish in his discussions with the FOMC. He had a great piece on last night, or yesterday with Bloomberg.
Yes.
Beautiful to listen to.
Inappropriate policy, inappropriate time.
Exactly. Obviously, what he's seeing, his position is justified.
Marcus, what's your read on that? I mean, do we have the appropriate policies in place, given that Jackson Hole is next week? High expectations for the Fed chairman to say something, do something to support the economy.
Well, I'm with Mr. Plaza, absolutely. I think the policy direction is inappropriate. In fact, I downgrade my own forecast for the U.S. substantially for next year, and it's entirely on the basis that both fiscal policy and monetary policy are moving in the wrong direction. We're focusing on austerity, and we're focusing on inflation, on creating inflation, both of which are destructive to the economic recovery. So I think the Jackson Hole conference will be very interesting, because the Fed is realizing right now that it cannot create inflation. I think that's one of the major problems, or at least the type of inflation it can create right now, which is asset price inflation rather than inflation in the labor markets, is something that's not helping our recovery right now.
Right, but the bet with QE2, right, in some ways was that asset price inflation would create a wealth effect, that it would help buoy things, but then it also, some say, raised commodity prices, took money out of the consumer's pockets. So, I mean, what is your hope in terms of something that could not only be supportive to the markets, but supportive to the economy?
Well, the CPI number today definitely told us there's inflation, just as long as you don't have to drive your car or eat. you're still okay. But other than that, you're in a tough position. But I hope if there is any sort of new quantitative easing, whatever tool they choose to use, what they call it, it is far more focused and surgical in its approach. And I would have to say it would have to go towards housing, whether that is a tax credit for new home sales or existing home sales. However, the housing market, I think, is the single most important aspect of the U.S. economy because of its relationship to the psychology of the American consumer and what it's doing to them and their wealth effect. Knowing they're sitting in a home that is not worth what they paid for it, but that if you go to sell it, it's even more dismal, knowing you have to take money out of markets and pay for it. Exactly.
And they just learned that.
And I think that's definitely to me where it has to be focused.
And Marcus, lastly here, I mean, we opened already concerned perhaps about transmission of fiscal crisis to financial crisis in Europe spreading here to the United States. Do we have a firewall?
I don't think there's a firewall per se, but I still think the way the market treats the European debt crisis and its impact on the European banking sector is still much more as an idiosyncratic risk for certain banks. I don't see the evidence yet that this is starting to evolve into a broader financial market crisis like we've seen in 2008. I think the European Union, but also the Federal Reserve, have implemented policies and facilities that will provide almost unlimited amounts of liquidity should that be needed. And I think that is if there is a firewall, that's probably what I would point to as what will prevent a rerun of the financial market crisis.
Marcus, thanks for your insight. I got to say, though, you take a look at how Europe is trading right now, down 5% in London, down 4% in France, down 6% in Germany. They're feeling a banking crisis at this moment, at least in today's trading session. Ben, thank you so much for your insights as well. I want to talk about another catalyst for this sell-off, Morgan Stanley's dire prediction about the world economy. Sarah Eisen has been looking into the report that unnerved investors overnight. And Sarah, some say they just threw fuel on the fire, right?
Morgan Stanley threw fuel on the fire. Margaret, this latest batch of ugly data that you're talking about just sent the 10-year Treasury yield below 2%. It is at a record low. The 10-year Treasury yield, 1.98%. It is trading at the low of the day, and this is a brand new record, beats the record of 2.03% that we hit on August 9th. What's going on here? The global economy. Morgan Stanley just added to the gloom with a report today saying the global economy is dangerously close to a recession. The Wall Street giant slashing its growth forecasts. Morgan Stanley now says the world economy won't manage that 4.2% that it originally expected this year. It will only grow 3.9%. Morgan Stanley blaming politics in Europe, where it called the response to the crisis slow and inefficient. In the United States, drama around the debt ceiling, hurting investor, consumer, and business confidence. And the key point here is that emerging markets are not immune. Morgan Stanley cutting its China growth forecast, along with Deutsche Bank, because of the weak export demand from the United States and from Europe, which are bearing the brunt of the slowdown. And yesterday, Brazil's economy shrank in June for the first time since the 2008 crisis. One of the best places to be looking in the markets right now to see all of these concerns is the bond market. You can see there the 10-year note yield, 1.99%. That is an all-time low. It has dropped below 2%, Margaret. Really a stunning move lower for bonds. Goldman Sachs says it is telling us the market is pricing in a mild recession and additional action from the Federal Reserve.
Stunning, Sarah. Absolutely the right word to use there. If you look at this was a year we were going to talk about the 10-year yield being at 4%, being at 5%. Look at that. We're under 2% yield there. Record low there. Also seeing a lot of money go into gold this morning. If treasuries are a safe haven bet, gold is too. It is up $32 right now in this morning's session. I want to take you to Europe right now because they set the tone overnight for what was going to happen here. A lot of pain being felt in European trading right now. Elliot Gotkin is joining us from London. Elliot?
Margaret, there is a lot of pain being felt over here. The markets are down very heavily. We've seen European stocks taking their biggest fall since in more than a year. We're also seeing the DAX over in Germany, for example, suffering its biggest one-day drop since 2008. Over in London, in Paris and in Germany, as you were just saying, Margaret, the market's down extremely heavily. banks, they are, there you can see up on your screen, they're down more than 5% in London, almost 6% in Paris, and 6.5% over in Frankfurt. Banks are among the leading decliners. You can see they're Brussels-based Dexia, down more than 12%. Barclays, also other UK banks like Lloyds and RBS down heavily as well. Societe Generale, that we were talking about last week, so much suffering those heavy falls, also on the decline again today. Now, there are a few reasons for this. There's obviously the concerns about global growth that you were just alluding to. Also concerns that banks with operations in the US might be scrutinised a little bit more closely by regulators over there, by the New York Fed, to ensure that they have enough funding, that their day-to-day funding is sufficient to insure them against any problems were another credit crisis to strike, Margaret.
Yeah, I'm glad you mentioned those reports about the New York Fed trying to check the funding abilities of European institutions here in the U.S. Also want to ask you, a report that got a lot of attention down here was that the ECB had seen a Eurozone lender come and ask for cash first time since February. What was the driver in that sell-off of banks? Was it that headline? Was it something else?
Well, we've seen volatility, as you've been talking about. We've got volatility has been declining for the last 6 days or so. It's jumped again today. We've got gold hitting a record high. There's just a real concern about these banks, about what they've got on their books, about concern for tougher regulation. There's not really much positive going for them right now, and that's why we've seen banks taking this massive hit today. Also concerns, of course, about growth and the impact that slowing growth is going to have on the businesses that they can do. We also saw car makers, I should say, also suffering heavily. One of the main drivers why the German stock market is down so much today. Companies like Fiat, like Volkswagen, like Daimler, suffering very heavy falls today. There's not a lot of positive stuff that I can tell you today, Margaret, I'm afraid.
Well, I guess the one thing that we can feel a little bit better about is that this is the end of August. Maybe some of this is people being out of the office as well. Elliot, thank you so much for giving us all of that reporting. As you just heard, we are following a market sell-off that is now, well, we're coming off the worst on the S&P, but we are still down 4.6%. Dow Jones Industrial Average down 500 points in these first 45 minutes of the trading session. Stay with us. Morgan Stanley said the U.S. is dangerously close to a recession. A former Fed governor says not very likely. Perhaps a bright spot. Up next.
Bloomberg's In Business is brought to you by SAP. The best run better with SAP.
When it comes to managing your investments, go pro. Go Fidelity expert opinions and insights. Go professional grade tools like our stock screener to help you develop your strategy and scan the market for the opportunities that meet your investment criteria. Go Wealth Lab Pro for backtesting technology to optimize your strategy and manage portfolio risk before you trade. Go Active Trader Pro for streaming news, quotes, and interactive charting to stay on top of the market. Then execute eligible trades in 1 second or less with Fidelity Intelligent Order Router. Go with the strength of an industry leader on your side. Tools, trades, and specialists, free for 90 days. Call Call 1-800-FIDELITY and go pro today.
21st Century Insurance here with our fastest way yet to prove that you're spending too much money on your car insurance. This car is covered by Progressive, this one by 21st. Both cars have the same coverage, same damage, and now the same fast repairs. But here's the difference. Drivers who switched from Progressive to 21st saved an average of $535 a year. Call 888-GET-2121. 21st Century Insurance, the same great coverage for less.
Behind every business is a what if. What if we designed an electric motorcycle? What if we turned trash into surfboards? Whatever your what if is, the new Sprint Biz 360 has custom solutions to make it happen, including mobile payment processing, instant hotspots, and 4G devices like the Motorola Photon. So let's all keep asking the big what ifs. Sprint Business Specialists can help you find the answers. Sprint, America's favorite 4G network.
Welcome back here on the floor of the New York Stock Exchange. We are looking at volume, about 300 million shares trading hands right now, and they are mostly sellers right now. Dow Jones Industrial Average off the lows, but still down 472 points in this first hour of trading. S&P 500 is down about 4.5% right now. Down volume clearly far in excess here. Gold prices also up $32, $1,826 an ounce after we already hit a record even before the active trading session began. Also take a look at another fear indicator, and that's the Treasury market. The 10-year note yield is at a record low. At last check, we were below 2%, and it was, I believe, at about 1.97 at last check. We'll bring you that. There you go. We're back around those levels now. Meantime, in the midst of all this market turmoil, former Fed Governor Wayne Angels says there's one thing to keep in mind. We're not going into another recession. In fact, Angels says we only have a recession when the Fed wants one. Wayne Angel now runs his own consulting firm. He's in Irvine, California, and joins us this morning. Welcome to In Business. Morgan Stanley says we're dangerously close to a recession. Why are they wrong?
Well, they're wrong because interest rates rising have been a problem in regard to pinpointing the beginning and onset of a recession. A recession is really a period of inventory liquidation, and inventory liquidation occurs when the yield curve reverses and short rates are higher than long rates. And of course, we're not anyways close to that. We have extreme amount of liquidity at the short end. And so I think people are getting a little ahead of themselves in regard to expecting that we will enter into a double dip in a recession.
And I understand the argument about the inversion of the yield curve typically forecasting or indicating a recession may be ahead, but given the amount of possible distortion that's in there in terms of Fed purchases of treasuries, in terms of just a global flight to safety, don't you think that perhaps the Treasury market isn't behaving in the way it has in the past?
Well, I would not agree with that. It seems to me that the Treasury market is primarily moved because of the actions the Federal Reserve has taken. And those actions the Federal Reserve has taken has certainly increased the U.S. price level. The U.S. price level is higher and will be higher than it otherwise would be, and that will eventually give us a turnaround in housing prices. We're already getting a run-up in agriculture land, and other land prices are moving higher. Mm-hmm. So the Fed has succeeded in getting a higher price level, and that's going to show through in houses. But it's about time that we go back and reverse Paulson's actions in regard to cratering Fannie and Freddie.
Let me ask you about that because, I mean, existing home sales today showed more pain for those consumers who can't sell their homes. But do you think that it would be right for the Fed to go in and once again purchase more mortgage-backed securities? Or do you need to see some other kind of government presence in the mortgage market?
Margaret, it is far less risky to put capital into Freddie and Fannie and to have them then attract private capital and really have a well-capitalized Freddie and Fannie and have them get out there and make commitments on loans that will free up bank assets. Because if Freddie and Fannie are out there willing to take those mortgages on, then all of a sudden the banking system has a lot more liquidity, and we'll see a tremendous turnaround in regard to lending.
All right, so there are perhaps a few other tricks up the sleeve in terms of support. Let me take a quick break. I want to have more insight with you, Wayne, if you would stay put for us for about 2 minutes. We want to take a quick break, and once again, as we head to that break, I want to remind you that we are seeing a strong sell-off. We're coming back a bit, but we are still down 4% in the Dow Jones Industrial Average, more than 4% on the S&P 500. If you're looking for green arrows, you'll find them in the dollar. You'll find them in gold this morning. Gold, $1,824 an ounce. Back in a moment.
Central banks are flooding the world with cheap money. Interactive Brokers will lend $1 million at just 1.3% for every $200,000 in a portfolio margin account. See our high dividend scanner for the many hundreds of stocks that yield over 5%. Interactive Brokers, stocks, options, futures, forex, bonds worldwide from one account.
My name is Jay Crawford, and I'll be test driving the Porsche 911 this week. I'm curious to see if it's an everyday car or if it's just that fun car that you take out for a drive on Sundays. It's just incredible. Driving the car exceeds my wildest expectations. I can honestly say I'm really looking forward to my drive to work. It's a lot more comfortable than I imagined it to be. A lot of thought went into the layout of the interior. Everything's at a hand's reach. Even on the wet surface, it felt like it was still on rails. The car handled like a dream in all conditions. I actually like that I have a longer commute because I get to drive it longer. It turns driving from a chore to a hobby. It's fun to drive. There wasn't anything that I wanted to do that I couldn't do with this car. Driving the 911 was awesome. It was like a dream. It got better every day.
We now offer phone service for $1.70 a month with MagicJack. That's just $19.95 a year. $19.95 a year. We give you free local and long distance and your own phone number. Make us your new phone company or add a second line with MagicJack.
Wouldn't it be great if you could get everything you needed for your small business for free? Like a building for free, a company car for free, your business website built for free? The cost to have your website professionally built can be thousands of dollars, but for a limited time, you can have yours built by the experts at Web.com absolutely free. And that's not all. Web.com will promote your new website in all the major search engines like Google, Yahoo, and Bing. If after 30 days you're happy with your new website, we'll continue to provide promotion, hosting, support, and maintenance, all for just one low monthly fee. If not, cancel and pay nothing. Call now to get your new site up and running in as little as 7 days free. Over 1 million small businesses rely on Web.com every day. Call now and find out why.
Call 1-800-862-9879. That's 1-800-862-9879.
Welcome back here on the floor of the New York Stock Exchange, we are seeing a global sell-off here in New York. You're seeing the Dow down 455 points, S&P down 51. That adds up to a more than 4% decline. At the same time, we're seeing the fear factor indicator, U.S. Treasuries, you're looking at a 10-year note yield right now of just about 2%. That's where buying's happening. We want to bring in former Fed Governor Wayne Angel for some perspective now. He runs his own consulting firm, joins us from Irvine, California this morning. Wayne, you say we're not headed towards a recession here in the U.S., but this is a global economy right now, and you are seeing panic in Europe. You are seeing economic contraction in Europe. Why don't you think that'll spill over to the U.S.?
Well, Margaret, it does spill over to the U.S. That is, our growth rate is going to be lower than it otherwise would be. But the fact of the matter is that the dollar is a very attractive, maybe undervalued currency, and U.S. stocks worldwide are very, very attractive, and we have a very, very high yield, and we have the prospects of increased earnings. So who knows, we might find an inflow of capital coming into the United States that would boost the dollar, and maybe that would slow down the effect. But we don't go into recession solely because of what happens in Europe.
Right, but what we're talking about is that fiscal issue in Europe becoming a financial one. I want to quickly play for you a soundbite from Neel Kashkar. He ran the TARP fund here in the U.S. He's now at PIMCO. Strong words yesterday. Give me your perspective on what he has to say here.
They are delaying and denying as long as possible because the medicine to actually put out this crisis tastes so bad. So they want to delay taking the medicine and take as little as possible just to try to stabilize things. And that means that they're always behind, always trying to play catch up, and the crisis is always getting worse.
He's talking about a possibility of Germany bailing out the ECB. What does that sound like to you?
Well, I would agree with what he has to say about Europe, but if that criticism takes place to the ECB, then he ought to give 4 different scores to Chairman Bernanke in the Federal Reserve, because no one could accuse them of being behind the curve and falling behind.
Yeah, Wayne, it is great to get your perspective. It's good to hear that you don't think we're headed towards a recession when that worry is weighing on us in today's trading session today. We'll be back with more in a moment.
Now's the time to move from where you are to where you want to go. Look up with U.S. Bank. Let's get the wheels turning. Use our strength and stability to open new opportunities. I can see clearly to lend and lift every business, every dream to new heights of prosperity. Good things are happening. Just look up with U.S. Bank.
Your policy looks good. Is there anything else?
Why'd you buy my husband a Falcon?
Thanks for the Falcon.
I didn't buy anyone a Falcon.
Sure you did. You saved us a lot of money on auto insurance. I used that money to buy a Falcon. Ergo, you bought me a Falcon.
You should get a Falcon. Most people who switch to State Farm save on average about $480. What they do with it, well, that's their business.
Oh, that explains a lot, actually.
Another reason people switch to State Farm.
I could have got a Falcon.
Get to a better state. If anyone...
No, no, and no! The ice sculpture goes over there. Frank, get in here.
Make the right first impression. Go to Vistaprint.com or call 1-800-VISTAPRINT today and get started with 500 premium business cards for just $10. Vistaprint. Make an impression.
Am I here by myself?
In the grip of arthritis pain, nagging back pain, joint pain, break the grip with Aspercream. Its maximum strength medicine relieves your pain, and there's no embarrassing odor. Break the grip of pain with odor-free Aspercream.
The floor of the New York Stock Exchange. You're in business with Margaret Brennan.
Welcome back to In Business. I'm Margaret Brennan, live here on the floor of the New York Stock Exchange. Here in the U.S., we are 1 hour into a painful morning trading session. You are seeing strong selling right off the bat. S&P 500 is down 4%. Dow Jones Industrial Average is lower by 441 points. And believe it or not, that's off the lows of this early morning session. Real strong selling of banks in Europe. Here in the U.S., primary declines in technology and energy, industrials, consumer discretionary, all on fear of global economic contraction. Let's get to Dom Chu, who has a look at all of this and what's driving the sell-off.
That's right, Margaret. Looking at what's happening here, like you said, all kinds of red on the board right now. The markets are, again, kind of roiling over themselves here about what to do about this economic data, both on the European side of things and the U.S. side of things.